Okay, this is question 4, part C. So the business took out a 2% bank loan of $12,000 on 1st January 2018, and then the loan is repayable every year for 4 years. Okay, interest as well as the loan is repayable on 31st December. So all these dates are important. Now, however, your year end is 31st March 2018 and 31st March 2019. You're supposed to prepare the interest expense account. So how much interest is the company supposed to pay? So what I'll first do is to draw out the timeline. My years is 1st April 2017 all the way to 31st March 2018. This is for the first year. For the second year, it is 1st April 2018 to 31st March 2019. Okay, then what happens is that I have taken the loan on 1st January. So 1st January is somewhere over here, 1st Jan 2018. The loan and the interest is repayable every 31st December. Alright, so 31st December is somewhere over here. This is 31st December 2017. Here will be 31st December 2018. Okay, so once again, I'm just going to put a dollar sign here so that I know this is the dates where I will make payment. Okay, so now we are supposed to calculate our interest expense. So in the first year, you took the loan only on 1st January, your year end is 31st March. So you should only be calculating interest expense for January, February, March. So in my first year, I will put 2% times $12,000 times 3/12. I don't calculate interest for the entire year. And my interest expense for the first year is only $60. Okay, so in your interest expense account, your first entry should be debit your interest expense account $60. So what you should do is to debit your interest expense account by $60, right? Now, normally when we pay interest expense, if we have paid using cash, we will credit our cash in hand or our cash at bank $60. But in this case, we have not paid the $60 yet. We will only pay for it in the next financial year, in December. Okay, as at 31st March, we have not paid this $60, so we cannot credit our cash at bank. So what we will do is we will credit our accrued interest expense $60, right? That's why when you open up your interest expense account, you will debit your interest expense account. Yes, your interest expense account has to increase by $60. However, you have to credit your accrued interest expense. Okay, and then of course show workings on how you got $60. Transfer this $60 to the profit and loss. So you're done for the first year. Now in the second year, you have to now calculate interest expense for this entire period over here. From April to December, if you calculate, it is 9 months. Alright, so once again, I'm going to show working 2% times $12,000 times 9/12, 9 months. Okay, so 2% times $12,000 this will give me $180. Okay, so now I will go back to my interest expense account. Now remember, we had an accrued interest expense account in the first year. When we prepare for the second year, we cannot forget about this accrued interest expense account. We have to transfer the accrued interest back to the interest expense account, right? So accrued interest, remember, it is credit in nature. When you want to transfer it out, you will debit the accrued interest expense account and credit your interest expense account. You cannot forget about this $60. That's why you have to transfer back. So now you have $60 credit. Okay? Now, as at 31st December, on 31st December 2018, you can start paying because this is the date you're supposed to pay. So you're supposed to pay for $180. Don't forget, you're also supposed to pay for the $60 here. You have to pay for both. Alright, so that's why I have $240. Okay, I will have to debit my interest expense. Now I can credit my cash at bank. because I actually paid the amount. And how did I get $240? Last year's $60 plus this year's 9 over 12 months. Okay, or what you can do is you are effectively also paying for 12 months. 3 months over here, 9 months over here. You can also just simply take 2% times $12,000 to get 240. But we are not done yet because we have not reached the end of our financial year. There are 3 months here which we have not calculated yet. Okay, so January, February, March, we must calculate our interest expense for 3 months. So what I'm going to do is I'm going to put 2% times your loan amount, must be careful over here, times 3 over 12. Okay, now your loan amount is no longer $12,000. Why? Because you have already paid off $3,000 on 31st December 2018. Question already says that the loan is repayable equal installments on 31st December of each year. So as of here, you not only pay off your interest, but you also pay off $3,000 worth of your loan. 12,000 divided by 4 years. Okay, so 1 year you're paying off 3,000. So you have a balance of $9,000 in loan left. So 2% times $9,000 times 3 over 12 is $45. So your interest expense for this 3 months over here is $45. So ask yourself, is the business paying cash for this yet? No, right? Because we only pay as of December, the next December. Okay, so therefore you will have to debit your interest expense account, $45, and credit your accrued interest expense. Because once again, in this case, you don't pay until the next December. Right? And then the 225, you will just transfer to your profit and loss.